live stream. Sorry, I've been away for a while. So we are currently on the gold charts. Let's get on with the analysis. We are currently on the gold charts on the 4-hour and the 1-hour time frame. So for gold, what we expect price to do, I want this 4-hour candle to close at the level strong like this, to give me a strong sign that the market is going to break the level. If this bullish 4-hour candle can close strong like this at this key level, then I'll be focusing on taking buys today. But if price retrace its move and leave a weak rejection and close below the level, then I'll be looking for selling opportunities. But right now, I'm just waiting for this 4-hour candle to close and see if it closes strongly above. I'll be looking for sales. I'll be looking for buys, sorry. But on the 1-hour time frame, it seems like price has broken that level. But remember, this is the level here. Price has not really broke strongly above. So we're currently having a pullback. So all I'm waiting for is to see how price react at this level. If price break below the level, then we are going down. But if this level hold price, if price can hold this level, then I can be looking for buying opportunities. I just want to see this pullback. Just want to see what happens when this bearish candle pull back to some of this level. You know, I set a sell stop order around the level preview on my previous stream, but I had to delete it because the bullish momentum at that time was strong and I thought the level would be broken very strongly. But this last candle that closed with a big wick. So I'm not sure we really broke the level yet. So I just want price to pull back to this level and see if price is going to respect that level so that we can look for buying opportunities. Or for the 4-hour candle to close. This 4-hour candle, when the 4-hour candle close strong above the level, then we can start planning on taking a buy. But remember, as I always said, never be the first to take your trades at key levels. When price start getting to a level, you need to be patient. Being the second or the third in the market is still okay, as long as you're laughing all the way to the bank. So never be the first to take a buy or a sell at key levels. Wait for more evidence and confirmation. Or if you must enter a trade immediately at a key level, use a buy stop or a sell stop order to enter the trade, so that you can only get trigger in when the momentum kicks in your direction. So that's how I approach my trade personally. I don't take trade immediately once price gets to that level. I wait for a few minutes to get the evidence to validate why I'm taking that trade. And once you start taking trades like that, you'll see the difference in your trading. As I said, let's see what happened. We want price to pull back a little because this 1-hour candle is not strong enough. I'm not sure it has broken that level. If price closed somewhere above with a more smaller wick, would have taken a buy now, but price retraced its move and almost close below the level. So that's why I'm being skeptical about taking the buy now. But if you're already taking the buy, you should place your stop loss below the level. This is your safest stop loss placement here. This is your safest stop loss placement. That's if you are in the buy already. If you are not, you need to wait for price to push deep into the level to validate that level as a strong level. Let's scale down to the 15 minutes. This is the level here. So from another point of view, we can see this as a retest of that level and a continuation up. I'm still really not confident about the trade. I'd rather have this 4-hour candle close first, because price, look at what happened yesterday when we took the buy. Price seems like it was breaking the level down and finally closed above the level after stopping us out in our first trade yesterday before continuing in our direction. So that's what I want to avoid. I don't want to be the first to take a trade here and get wicked out before a continuation. So I want to get more evidence before I take the buy. And it seems the volume is a little bit slow. You can see the candles are not really moving much. That's another thing. The volume is a little bit slow around the level. So let's wait for more evidence. Remember, trading is 90% waiting and planning and only 10% execution of your trades. So if you really want to scale up your trading journey or career, you should get comfortable with waiting, planning your trades and waiting for your trade to play out. Don't chase your trades. The professional traders don't chase trades. They have a plan. When they come to their market, when they come to their charts, they mark out their levels, their support and resistance level, and that's the only time they start planning and seeing whether there is a trading opportunity. You don't have to trade every day. You can only trade when there's a high probability trades. And as I always tell you guys, your highest probability trades will always come at key levels. That's from your support and resistance. This is where your high probability trades are going to come from, not in the middle. And if you have been following us on our live stream, you will notice all our trades, we take them at key levels. You can still play back some of the live stream so that you make sure I'm not lying. All our trades, we take them at key levels. We don't take trades in the middle. So that's part of our trading plan and we stick to it. So before this 4-hour candle close, there's still some time. But right now we'll be focusing on this. I want price to pull back a little and still get a reaction. If we are failing to break below this level here, then I can still get into a buy or set a buy stop order. But for now, I'm not buying the market. I'm just being patient. I'm not in a rush. One thing I want to talk about is FOMO, the fear of missing out. Most of us fear FOMO, the fear of missing out. Most of us dread the fact of missing out on trades, and we get impulsive, take a buy or a sell even when there's not enough evidence in the market to validate that trade. And if you really want to be consistent in your trading, I would advise you to have a trading journal. Trading journal helps you because you get to document all your trades. Whether it's a winning or a losing trade, you document it. And that process of documenting your trades will show you, or you will start getting to understand what works and what doesn't, and you start focusing on what works, what strategy, what patterns. If you take a certain pattern 5 or 10 times, how many times do you win it, and what are the strategy you need to focus, zero in on. So documenting your trades helps you to be more focused, and you only focus on taking high probability trades, because you know that at the end of the day you need to document why you took that trade. What was the evidence? Why do you took that buy or sell? So once you start understanding that you have to write that trade down, you start taking your time more, focusing on high quality setups and not just any trade just because you feel it's a good opportunity. And as I always stress out the fact, you should take the maximum of 2 to 3 trades per day. That's if there's an opportunity. 2 to 3 trades per day, because it helps you to filter out all the low probability trades, and you start zeroing on you zero in on the higher quality trades. That's the only way you'll be profitable, because most of us, we overtrade. We take a lot of trades per day, and even though we made some profit, because we always feel the need to trade, we end up giving back our profits and sometimes even blowing up our account, because you make confidence level increases. When you confidence level increases like a drug, you get high and you keep on trading, and before you know it, you are increasing your position and lot sizing, because you think you are smart. It's because you are smart that you win the trade, and you end up blowing up your account and blaming the markets or the news. So that's a vicious cycle. I've been through that, and that's why I'm telling you, because I know how it feels. I've blown up many accounts when I was starting my journey. It was really really tough phase for me at that time, but hopefully I learned the lesson the hard way. But the experience now is so valuable to me that I can't sell that experience. Of money can make me sell the experience, because you learn a lot through that tough phase. But what I'm saying is, you should try to avoid the avoidable mistakes. Even if you learn from a good teacher or a good mentor, you still need to learn from your own personal experience. That's why I stress the fact of funding a small account, $50, $100, $200 account, and trade it personally. Trade it personally while you learn from other mentors, so that you need both their experience and expertise and your own personal experience. Don't just be focusing on getting signal or buying a signal, buying a monthly signal also. That's also good, but if you really want to be here for the longer term, then you should focus on learning. Once you understand the basic fundamentals, that's all you need. Once you get the knowledge, forget about the capital. The capital will come. Focus on gaining the knowledge, because once you have the knowledge, nothing can take the knowledge from you, and that's the most valuable asset. Because once you get the knowledge, nothing can take it from you, and you can be wherever in whatever corner of the world and still be able to make good money. Once you have your phone and you are in whatever corner of the world, if you are traveling the world, wherever you are, if you just have a phone, you can still make money. So that's the power of understanding Forex, because there's nowhere in the world you can be and can't trade Forex. So gain the knowledge, don't focus on signals. If you're a beginner, don't focus on signal. Even if you are a pro, I'm just been trying to be honest with you guys. I'm not saying you should not buy signals and the rest, but focus on learning. You can buy their courses, but buying a signal, you don't get to understand what's happening, why we are taking that sell or a buy. I don't know if you're understanding me. When you pay for a signal, let's say the VIP group signal, when I drop a signal for you guys don't understand why we are selling the market or why we are buying it. Just because I say we should buy, you guys buy, sell, you make money, you are happy, but you don't really understand the basics on why we took that buy or sell. So you are not really learning. You're just there to make money for the short time, because definitely for the short time, as far as it's not for the long time. The only long-term success or consistency you will get is when you understand the market yourself. So don't focus on getting signals now. I know we all have we need to pay bills and the rest. That's good, but there's something we call sacrifice. There's something we call long-term planning. You can sacrifice now, focus on the knowledge. You can get a course or look for a mentor that will teach you one-to-one, one-to-one. Just gain the knowledge first. That's all you need. Gain the knowledge first. You can do this. You can get this knowledge. We all have different learning curves. So our learning curves is not really the same, and and we also have different ways we process new information. So some people learn faster and some don't. But the basic thing I'm trying to say here is get the knowledge. Don't be focused solely on signals. Don't be focused on signals. The money will come, but get the knowledge first. So I've been talking for a while. Let's get back to our charts. And as I said, if you are just joining us, you haven't subscribed, subscribe to the channel now. Give us a thumbs up, like the stream, so that I get notified whenever we're having the streams. And if you are currently on, if you are part of my Telegram community and if you're on the live stream, I'm also talking to you guys. Don't be focused on signal now. If you are really serious, get good mentorship. You want to learn how to fish. Learn how to fish and not ask for people to offer you fish every day. That's what I'm trying to say. Focus on learning. Don't focus on signals yet. If you understand the basics, just the basics, fundamentals of how the market moves, you'll be able to get your own signals yourself, because you have an overall feel of the market and how it moves. I get multiple comments of people saying, how did I predict the market will sell at this level or buy at this level? I just smile and tell them, the market repeats its moves every day. It repeats certain patterns every day. There's a science behind this. There's a science behind this. We are not gambling. We are not gambling the market. We are not hoping it's going to go down or up. That's a mistake most traders do. They think maybe we just play a guessing game. No, there's a certain way the market moves, but you won't understand that now until you get to a level. If you get to a level of learning, most people see me trading, they think I started a year ago or a few months ago. I don't want to be boasting, but I've been trading now for 7 years. I've been trading, and I take thousands of trades. I take trades on my personal account. I took pro firm challenges. I took a lot of trades. I win some, I lost some. So all these lessons is coming from my own experience. I'm not just guessing this. I've taken so many of these patterns. I know the market repeats its moves, and moving on to another point I want to make here is most of these gurus tell you can be a millionaire in a week overnight, or you can learn Forex in 1-2 weeks. But I doubt that myth. Yeah, you learn about the candles and the rest, but to gain the overall experience, I know most of you guys understand what they call the 10,000 hours. Yeah, that's basically true. I'm not saying I've hit the 10,000 hour, but you need a lot of practice, you need to be on your charts every day, because when I was first starting, every day I came to my chart. Even though I'm not going to be trading, but I still open my chart. Just open my chart and watch what the candles are doing, what the pairs are doing. I watch videos of good mentors online, and I attended seminars when there's a good seminar in town. So all this, you need the experience. The experience is very important, and experience comes from lived live. You need to live it. You need to go through it. It's not something someone can just download in you. You can learn 1 or 2 from others, but you still need that hours, that 10,000 hours. You need to put them in place to really understand the market. So currently price is pushing up. We are back on our charts. Thank you guys for the likes. If you haven't liked the stream, we're still waiting for you. Takes you a second to do that. You guys are the reason why we keep doing this. I don't have to do this, I just do it for you guys. So let's see. So we can see 2-week rejections here. Price is respecting the level. So it seems we are going up. But I still need this candle to close, this 4-hour candle to close. And when this 4-hour candle close, I'm going to get a pullback to the level, to this level, and this is when I'm going to be taking my buy. I explained to you guys why I didn't I didn't take the buy yet because of what happens at some of this level. After taking the trades, the market closed with a wick into the level. It's a 4-hour candle, but if you scale down to the 1 hour, you can see, when you scale down to the 1 hour, you can see two candles close below the level. So this seems like this a false breakout, a breakout and a break back into structure. So this is what I'm trying to avoid. So I potentially want to see a clean 4-hour candle close. Clean 4-hour. If this candle close strong like this, there's no doubt we are going up. So all I need is this candle to close strong like this. And after the candle close, we'll start getting a pullback. The next candle will be bearish to pull back to the level, and that's where I'll be taking my buy. So the 1 hour candle is still open, and so that's all I'm waiting for. Let's wait for this 4-hour candle to close. Can 4-hour candle close like this without a wick like this bearish candle here? If it closes strong, there's no doubt we are going up. So be patient. Let's wait for that to happen. And if you're also looking for mentorship, I offer a one-to-one mentorship online. Or if you just want to join our free Telegram community, I can send you the link. So whichever one you want to do, it's up to you. But you need the knowledge. Don't be focused on signals now. Get the knowledge. So as I said, traders, if you're on the stream, like the stream. Subscribe if you're a new viewer. It takes you a second, but it does a lot more for the channel. And it helps push the content out to more people who might benefit from this. And if you want to get in contact with me, check out the video description. There's a WhatsApp link. You can chat me up directly with your requests or DM me if you have any question. And I'll get back to you. So remember, what we are saying is, let me mark that level for you guys. We need a break of this. So all we are waiting for is a break. It's a break of this level. Sorry about the control. So we want a strong, this 4-hour candle to close strong above this level. So if it closes like this, it's fine with me. Then the next phase will be the pullback phase. After we have that break, price will definitely pull back to the level it has broken. Then this is the time we'll be taking our buys at the pullback phase at this level. Once price pull back, this is when we need to be taking our buys for a continuation up. For a continuation up back to some of these highs here, this support area. Sorry, yeah, this resistance area, sorry. Okay, so this is all we are waiting for. Remember how we trade. plan out our trade and wait for it to play out. That's how you trade. Don't just take a buy or a sell once you come to your charts. You need to plan your trades, wait for it to play out. If your trade play out, take the trade. If it was a winning trade, you're laughing all the way to the bank. But if it was a loser, you walk away and look for another good opportunity. For one thing, I keep stressing the fact you can't eliminate losses from your trades. They're all part of the same coin. You can't have one without the other. So losses are all part of the trade, are all part of trading. Don't be afraid of taking trades. That's the only way you learn. So don't be really afraid of taking your trades. As long as you are trading with a trend and you are following your trading plan, definitely be profitable. And if you have a good risk management, risk to reward, that's all you need. That's your edge. Remember, it's a numbers game. You are not going to win all your trades, and one trade doesn't define you as a trader. One trade doesn't define you as a trader. Just because you took 2 losses in a row doesn't make you a bad trader. That is, if you took those 2 trades in accordance with the trend. Was the trend moving down and you took a sell, or was the trend moving up and you took a buy and you still lose the trade? If you took trades in accordance with the trend, overall trend of the market, and you have a good stop loss, you did everything right and you still lose the trades, I think you are still on the right path. You are still on the right path. But if you took trades, if the market is going down and you are taking buys, that's your fault. You deserve that loss. So basically, losses are part of the game. Make peace with your losses. Before you start trading for the day, imagine yourself losing some of your trades. Helps you to be calm, because you are not going to, and it helps you to be calm and your emotion won't run high. I know the feeling before taking a buy or a sell, before getting into a trade, your heartbeat increases, your emotion gets high. I know the feeling too. But once you have mentally accepted that loss, I stress the fact of having a fixed lot size or fixed risks on each trade. If you have a fixed risks on each trade, before you take a trade, you already know how much you can lose on that particular trade if the trade goes against you. So you are not really going to be bothered, because you have already imagined what your account balance will be, so you can set your trade and walk away from the chart. Don't always be checking your charts every minute. That's a surefire. That's a sure way to fail. Don't be on your charts every minute checking on trades you have taken, because you start closing your trades too early and leaving money on the table just because you're afraid of price pulling back on you and giving back your profit. So avoid that. Once you set, as long as one of the strategy I use is, once I've removed the risks from my trade, maybe I've gone to break even, I automatically, if I'm not having a live stream, I just close my chat, set my take profit, because number one, I've already removed the risks from the trade, so I'm having a free trade running. so I have nothing to worry about. I just set my TP. If price move in my direction, that will be great. If price turn back and take me out at break even, that's still great. I have nothing to lose. That's why I focus on risks first. Once I'm in a trade and price start pushing in my direction, I adjust my stop loss into half so that I can only lose half of a percent on that account. I don't want to lose the full position. Let's say if I take a buy here and this move price start pushing my direction, and I've not gotten a one-to-one yet, one-to-one risk to reward, I automatically reduce my stop loss into half, so I only have half a risk in the market. So that's one of my risk management strategy. So imagine I can take 5 trades like that and risk half of a percent on each trade. That's in total I'll be risking 2.5% in 5 trades. So imagine that. But when I'm winning, I go for a 1 to 3. So these are your edges. These are your edge in the market. It's not about being right all the time. I can have a 40 or a 50% win rate and I'll still be profitable. Let's say a 40 or 30% win rate and I'll still be profitable, because I always go for a 1 to 3 or 1 to 4 risk to reward, and I risk half one or half of a percent on each trade. So that's your edge in the market. So remember traders, all we are waiting for is for this 4-hour candle to close above this level, this key level here. If this 4-hour candle close, the next candle will be bearish to come for a retest before a continuation up. So that's all we are waiting for. So let's play the waiting game now. Okay, welcome back, traders. So 3 minutes before the candle close, so let's see what happens. 3 minutes. Hope you guys have been having a very wonderful week. I did personally. Okay, if you're just joining us, if you haven't subscribed, you should subscribe to this channel. Give us a thumbs up. It takes you a second to do that, but it does a lot more for the channel's growth. If each of you can give us one like each, that would be amazing. So 2 minutes before the candle close. Thank you guys for the likes. You guys have been generous. The likes are really going up. So 1 minute before the candle close, just want to see that candle close. Okay. This is all we are waiting for. Okay, so this is the 4-hour candle close I've been talking about. We had that strong candle close above the key level. This was the candle close that broke the level. So we are now 100% sure we are going up because we have violated this level. And this is not just any candle, this is a 4-hour candle. So the next phase now is a pullback, which is this arrow I've drawn. We need price to pull back, and when you scale down to the 1 hour time frame, you can see it. We need price to pull back to this area for us to take a buy, so that we can safely place our stop loss below the level, have a more safer and smaller stop loss. You know, part of our trading plan is to always take trade at key levels. So the first part of our plan has played out. Price has closed strongly above the key level from the 4-hour time frame. So all we are waiting for now is a pullback. It's a pullback to this level, to the level it has broken. A sure sign of failing to break below. That's when we will take our buys. So let's see. Hopefully we'll get a pullback. If we don't, that's it. We'll let that one go. But we expect a pullback. The reason why we didn't take the buy immediately is because this candle hasn't closed. This 4-hour candle hasn't closed. So we can't be trading like that. We need the evidence first before we can take a trade. And that's what we did. If we get a pullback, that would be great. We'll get into the trade around this area. Take a buy when price gets to this level. When price pull back. But if price doesn't and price continue up, we'll let that one go. Now look for another trading opportunity. That's how, if you really want to make money in the long time, that's how you need to be trading. You need to have a plan and wait for it to play out. If your plan play out, take the trade. If it doesn't, you walk away and look for another opportunity. So that's all we are doing here. We are waiting for our plan to play out. If it doesn't, that's it. So we just need price to pull, but let me mark out the area on the 1 hour time frame for you guys. We need price to pull back to this. No, not this. Wow. Just made a mistake there. Remove our key level. Let me still place our key level in place. So all we need price is to pull back to this level here. Once price pull back to this level, that's where I'm going to be taking my buy. I'm placing my stop loss below the level, below this key level, which is this, which is below this level here. So that's how I trade. That's my strategy. Take the break and retest strategy. So let me wait for that pullback. Once price get there, I'm taking the buy. So let's play the waiting game and see. Price is pulling back. Candle is turning bearish, as you can see. Just need price to pull back to this level for me to take a buy. There's no doubt we are going up. Let's let the market do what it wants. Let's play the waiting game and see what happens.